What's up, guys? I'm Nobody Special, and Wall Street Silver's back in the news again today, except this time it's none other than Chief Retail Investor Molester CNBC covering the silverbacks at Wall Street Silver. We're going to go through the video. I'll give you my reaction. Ready? Hit it. Thank you for joining me. I'm Jack Gamble, and I'm Nobody Special. And I know I did a reaction video yesterday, but here we are a day later, and Wall Street Silver's back in the news, this time on CNBC. Now, CNBC doesn't exactly have a reputation for accurately portraying the apes on TV, now do they? So I was a little skeptical when I heard about this. Now there's two different segments. One was done on Power Lunch, and then there was another similar segment was done on Fast Money. We're going to go through both, and I'm going to give you my reaction to them. So let's see what we got. We're going to start with the one on Power Lunch. Here we go.
They go by the name of Silver Apes, Silver Stackers, and Wall Street Silver. The 123.
Okay, I got to pause it right away. Is it that hard to say silverbacks? Really? CNBC? All the people you got working back in the control booth with the things on their head and the mixing boards and everything, and all your little producers and everything doing their research? Silverbacks? Is that too hard to say? I mean, I keep hearing you calling us silver apes. Silver apes, silver apes. I've been on Wall Street Silver for a long time now, and I have never once heard the term or read the term silver apes used. Silverbacks. Get it right. But I digress.
3,000 plus members encourage each other to buy bars and coins as a hedge against inflation. They want to push up the price of silver to, $1,000. The spot price right now is just hovering around $26 today.
Again, with this $1,000 price target thing, look, I get it. There's some wild price targets that are out there, right? Nobody thinks it's going to 1,000 next week. What? I feel like they're using this $1,000 number to make us look stupid on purpose. I've seen some of the serious DD that goes on in this group, and we don't get anywhere near these $1,000 numbers unless we're talking about a hyperinflationary scenario. Now, if we're talking about a hyperinflation scenario, yes, that $1,000 price target becomes realistic, but that's not because of the silver going up in today's dollars. That's because of tomorrow's dollars becoming worthless. So if you're going to throw that $1,000 number around in the press, have the journalistic integrity to tell the full story behind it. Don't use it to make the subject of your piece sound stupid. CNBC. Moving on.
Today. But retail traders argue there are way more paper claims, such as derivatives, for example, on silver than actual hardcore tangible silver. In other words, if demand for silver increased, supply would run short and the price would surge. But the squeeze on silver...
Again, they say that the silverbacks argue that there's too many derivative contracts representing too little silver. They make that sound like it's our opinion. That's not our opinion. That is a fact. There is way more paper silver floating around in the market, trading hands back and forth, than there is silver in the vaults. Nobody denies that. I mean, even the people that we're fighting against here, the bullion banks, don't deny that there's more paper than there is silver. Now, there are disagreements over the extent to which, is this physical silver levered 1,000 to 1, 10,000 to 1, or is it levered more like 10 to 1 or 100 to 1? That's up for debate. But we don't argue that there's more paper than there is silver. That is just a fact. That is nobody's argument.
Does differ from the squeeze on companies like GameStop and AMC. There's a lot of silver out there and not as many silver short sellers to attack.
I keep hearing that term. There's a lot of silver out there. There's way too much silver out there. I don't think that's really true. Or at the very least, there isn't that much that's for sale, because most of the silver that's out there is not up for sale. It's sitting in vaults and long-term holdings. The actual physical silver market, the physical silver that is up for grabs, is very illiquid. There is not that much physical silver representing everything being traded. And that's why the silver squeeze is such a tangible, plausible scenario, because the silver market is incredibly illiquid. All right? CNBC's people, their producers, are smart enough to know this. And they keep saying that there's plenty of silver out there. There's plenty of silver out there. it strikes me as disingenuous. I'll just say that. That's putting it mildly.
Money managers have had net long positions on the metal since 2019, according to data from the Commodity Futures Trading Commission.
So she talks about money managers being net long since 2019. What she doesn't mention is the massive short that the bullion banks have been. And the bullion banks' net short position has been at historical highs for most of this time. I mean, it's swung back and forth. It's come up, it's come down. But how are you going to go on TV and talk about how money managers are so net long and there's no shorts to attack when you're ignoring this massive short that the bullion banks have in place? Not to mention ignoring the massive derivatives market and the unallocated storage schemes, which are short bets on silver, right? When you take 1 bar of silver and you sell it 3 times, you're short silver. I don't care how you want to argue, oh, it's 1-for-1 backed, we have cash reserves or this or that, and Perth Mint can play their games they want with the audits all they want. Fact is, unallocated storage schemes are short silver, and that is a massive short. So again, CNBC is ignoring the elephant in the room here. All right, let's hear from this shiny-headed guy. I don't know who this guy is.
If you think of the history of silver, humanity has been mining this stuff since we discovered picks and shovels, right? I mean, it's, there's plenty of silver above
Picks and shovels were not discovered. They were invented. Semantics.
ground. A little like gold, it doesn't get thrown away.
And that
Okay. My biggest problem here. Apparently, that guy we were just hearing from, I don't know who he was. Let's back up a little bit so we can see his face. Okay. Apparently, this guy is somebody I should know. I've never heard of him. He's one of the heads of research at Bullion Vault or something like that. He just said silver doesn't get thrown away. Okay. If this guy is in fact somebody I should care about his opinion, someone whose opinion I should care about, then he is bold-faced lying. All right? For him to say silver doesn't get thrown out. If this guy is really any kind of an expert on silver, then he knows that is a lie. So I'm not going to use kind, gentle words like disingenuous. This guy is lying because most silver goes into industrial applications, electronics, and devices. And most of those devices end up in a landfill. Most of those devices don't get recycled. Some of it does. And as the price rises, I expect more of it will get recycled. But right now, most of the silver that goes into those industrial applications, which is most of the silver that comes out of the ground, ends up in the garbage. This guy is lying. Whatever your name is, Mr. Clean, you're lying. You're a liar. There, I said it. Moving on.
And that's why many around the world do believe currencies are very vulnerable and that physical investments are the way to go.
I wonder why they're showing this January to February chart here, because that does make it look like, oh, wow, look at that move it made January 31st and February 1st. But that stops just short of February 2nd, which we all know what happened on February 2nd. And in my opinion, one of the biggest financial frauds in history happened on February 2nd. And this graph conveniently cuts off right before that. That's interesting that they would choose that data range.
Even helped push up the price of silver to a 5-month high just this past January, which is why we called that a short squeeze as well. And according to the Silver Institute, the demand for bars like this, and this is a silver
she's got a
bar
bar
right now, are expected to soar to 26% of total demand, up from 8% last year. One member of
I don't know about those numbers. So she's holding up a bar and she's saying demand for bars like this. I'm guessing she's saying investment demand could be as high as 26% this year, up from 8% last year. I'd like to see the source of that data. I'm not buying those numbers. Again, everything I've ever read has said that silver is 60% industrial, 40% investment grade. And that is up through 2019. Last year, I would bet good money that more silver was used or at least consumed on the investment side. And I would certainly argue that this year, more silver is going to be used on the investment side than on the industrial side. Now, whether or not that holds long term is certainly up for debate. But this 8% or going as high as 26%, up from 8% last year. I don't know. I don't trust that data. I don't think that's accurate information. I'd like to see it.
A group of silver apes told me that he believes the market is manipulated
Silver
by bullion
Silver
banks,
banks.
and that's why he's holding on to this stuff for a lot longer.
I
I knew you wanted to see it.
This.
I thought it was an
Come
iPhone
on over
at
here.
first.
Yeah, no,
come
no,
on,
that's-
sit right on up. Come to the
This is great.
table.
Look at this.
Here, come on up.
This
Look
is
at his
worth
face.
$300.
This is 300.
I got to pause it here. Look at Tyler holding that bar there. I remember this feeling. This very well may be the first silver bar he's ever held. Because he is in awe of it. He's trying to compose himself and trying not to overreact to it on the air. But this is not a guy who's used to holding silver bars. And he's obviously, he likes it. Let's just put it that way. The way he reacts to it, the way he hefts it, it's heavier than he's expecting. I remember that feeling the first time I held a 10-ounce bar of silver. I know it very well. It was awesome.
That's
Yeah, 'cause
heavy.
it's 10 ounces.
That is really,
How heavy?
That's a lot of bullion.
Hold it. It's quite heavy. I should have looked up the weight so that I could have made maybe a book.
Yeah.
Now,
You might
Kelly
want to-
Evans,
Yeah.
not as
But yeah,
impressed.
this is
Looks like a little credit card.
Right?
Yeah, Kelly's not
yeah.
nearly as impressed as Tyler was.
well, especially
Depending on the
Look at
credit
Tyler.
because so many
And who
people
owns
are
it.
storing.
Look at him gawking at that silver bar. Even the second time she hands it to him. Look at him gawking at that thing. Tyler is in love. Come on, Tyler. Come join Wall Street Silver. You know you want to. You know you want to dump all that extra cash sitting in your checking account into an inflation-protected asset. Come on. You can come join us. We'd love to have a CNBC guy in Wall Street Silver. We can put clothespins on our nose.
Well, especially,
Depending on the credit
especially
card
because so many
and who
people
owns
are
it.
storing silver, gold in their houses, or more specifically, if you're getting a lot, in vaults all across the world. It's gaining in popularity.
All right, short this. Okay. Thank you.
Short this. He had to make that little crack at the end, right? All right, so all things considered, that Power Lunch segment wasn't that bad. When I heard it was CNBC covering the Silverbacks, I was expecting a lot worse. Now, there was a lot I would have done differently. There's some things there that I didn't agree with. Again, I don't like that they keep using that $1,000 price target to make us look stupid. But all things considered, it's CNBC covering the apes. It could have been a lot worse. So now let's go through the fast money. Now, fast money tends to be a little bit more technical, and they get into a little more numbers. So let's see what we get here. All right, so here's our second video. This one, there's going to be a little bit of repetitive information on this one. This one was on Fast Money later in the day. I looked around CNBC's website. I couldn't find the full video of it. Luckily, one of our silverbacks, not silver apes, CNBC, one of our silverbacks, Electric Value, was nice enough to take this screen grab of the complete video and post it in Wall Street Silver for us. So shout out to Electric Value. I'm going to borrow your post for this video. Thank you, sir. Appreciate the effort. This is a screen grab of a screen grab, so I apologize for the poor quality. But again, thanks Electric Value for doing this for us.
Welcome back to Fast Money. What you're seeing there is a chart of silver because Reddit traders are shouting hi-ho silver away. And one intrepid group thinks they can push that commodity to $1,000.
We're intrepid. Did you hear how he described us? Intrepid. We're intrepid, Wall Street Silver. Congratulations on your intrepidness.
An ounce. It's at 26 right now. Let's bring in Christina.
Did he just use that? Sorry, I was talking.
It's at 26 right now.
I gotta rewind.
That commodity to $1,000 an ounce.
He said it. He said the $1,000 number again.
Let's bring in Christina
Come on. Leave it alone.
Christina P, I don't know. How do you get from 26 to 1,000?
You corner the market. So this is a group of Redditors, or a subgroup, and they're called the Silver Apes, Silver Stackers, or Wall Street
Silverbacks.
They have roughly 123,000 plus members, and they encourage
Say it again. Silverbacks. We're silverbacks, not silver apes.
each other to buy actual bars and coins of silver as a hedge against inflation. There's even another website that markets t-shirts that say cash is trash, silver is...
Okay, I've never seen this website before in my life. I don't know who this guy is. I don't think this is any kind of like official Wall Street Silver thing. I don't know why Wall Street Silver is putting this up there. I don't know where this came from. I don't know. I'm not trying to start any drama or anything. I just never seen this before.
Right now. And they want to push up the price of silver. Yes, $1,000 is a steep point, but they do want to see it climb higher, especially considering the spot price is around $26, like you mentioned today. Retail traders argue that there are more paper claims, such as derivatives, let's say, on silver than actual tangible silver itself involved.
So this is getting a little repetitive from her lunchtime piece. I guess it's the same info.
Would surge, but the squeeze on silver, though, it does differ from the squeeze on companies like GameStop. There's a lot of silver out there and not as many silver short sellers to attack.
I don't think there's that much silver out there.
On the metal since 2019, according to data from the Commodity Futures Trading Commission.
If you think of the history of silver,
Oh, there he is again. Look at this guy. He just looks like a Bond villain.
shovels, right? I mean, it's, there's plenty of.
I mean, somebody get this guy a monocle and an evil cat to sit on his lap, right? I mean, welcome, Mr. Bond. You almost got silver over $30 an ounce before our price smash. Yes, but you underestimate how many silverbacks there are. We'll have silver above $30 an ounce sooner or later.
Doesn't get thrown away.
Yes, it does. Silver gets thrown away. Yes, it does. He's lying.
In the near future, and that physical investments are the way to go. They even helped push up the price of silver to a 5-month high back in January. And according to the Silver Institute, demand for bars like this one,
Look at her flash that bar. She likes the bar too.
26% of total demand.
Let's see that again, Marv Albert.
Price of silver to a 5-month high back in January.
Look at her flash that bar. She's been doing this all day. Like this one right here.
Safe is expected to soar to 26% of total demand. That's up from 8%.
Look at Brian Hsu. He's impressed also.
A group called Silver Apes told me he believes the market is manipulated by certain banks, and so that's why he's holding on to this stuff.
Oh, she flashed it again. Twice in one segment.
That's a flex there. She's got a bar of it. I've just got some silver eagles and silver dollars somewhere around the house in a shoebox. Christina P., thank you very much for.
That's right, Brian. Everybody's stack has to start somewhere.
Trade it, guys. Her bar and all. If you take a look at this, BK, I go to you for this first. Do you believe that there can be any way that silver? We saw the squeeze back in, I want to say, February of this year. The squeeze got you to maybe the 30, 31 level. 1,000 is a far leap, is it not?
1,000 is a far leap from $26. Absolutely.
Again.
That seems to be a very big jump.
Again, this is disingenuous on the part of CNBC. The $1,000 has more to do with the dollar losing its value due to hyperinflation than it does with the purchasing power of silver increasing as measured in today's nominal value. So the way there's $1,000, $1,000. Stop it. All right. CNBC knows better. We know better. They're lying. Moving on.
That being said, listen, the Hunt brothers tried to do it back in the 70s, and it worked for.
By the way, BK, your tan is terrible. I'm just saying. That is the worst spray-on tan I've ever seen.
A while, they cornered the silver market, and then all of a sudden, the people came back and raised.
I like
prices
BK, by the way.
Went bankrupt. So, yeah, could you create a short squeeze in any commodity by buying it up? Absolutely. I like silver. I think you can get a breakout here. If I'm long silver at 26 and it goes to 35 or 40, I'm still going to be happy. So I don't think you need to think the $1,000 is your price target.
Realistic price targets.
All right, so at least a few options traders out there seem sympathetic to the Silver Apes cause because they're bidding big that silver could be about to surge nearly 20% to BK's point. So let's bring in Mike Coe. He joins us with the options action on this. Have you seen anything? Is there any activity out there that indicates, Mike, this could be a trade that gets you above that $30 level?
Okay, so before we get too much further into this part, I want to take a minute to clarify the difference between a trade and an investment, okay? So when you trade in your fiat for silver, you're storing your wealth in a physical bar, a physical coin. That is an investment. That is a store of value. That's not a trade, okay? So what they're talking about here is a trade. When they're talking about a trade, they're talking about a timed evolution in pricing. So if we get into price targets and things like here, what they're talking about in this trade, I don't want to say, like, when I say I would sell here or buy here and, look for a top here, I'm talking about a short-term trade. I'm not talking about selling physical silver, all right? I never sell my physical silver. Just want to get that out there.
Well, we did see above average call volume on the September COMEX silver futures. That's the most active futures contract, the front month for silver. We saw well over 4,000 of those trade overall, and the most active contracts where we saw calls outpacing puts by about 17-1, where the September 31 calls, we saw a little over 1,300 of those trading for about a dime.
Okay, so that's interesting. So if you follow Arcadia Economics, you know that the bullion banks smash the price down right before options expiration almost every single time. So looking at this screen right now, 17 times more calls than puts. That is one crowded trade. All right. If I'm the bullion banks and I can manipulate prices at will the way they do, I'm going to let silver run up for a little while here. I'm going to let it run up, and then right at the last minute, I'm going to smash that price down right below this $31 strike. And I'm going to make sure all 1,300 of these options expire worthless. That's what I would do. All right. So these options expire on August 26th. So right there, you've got your short-term price cap, all right? Because I would bet good money that the bullion banks would not let silver go above $31 if they can help it between now and August 26th. Or maybe they will let it go up above, but they'll smash it back down below just in time for these options to expire, all right? So if you're playing the options market right now, I would pay very close attention to this $31 level around August 26th. Because I think silver has a lot of room to run. I talked about this a few videos ago. Silver has a lot of pressure on its price upward right now because of rates being down and everything that's going on there. And the spending in the Treasury General account and when the government is going to start borrowing again, that all comes to a head right around September, I think. So this is very interesting here. I would pay close attention to this $31 level between now and August 26th. And if we get much above it, and again, I'm not talking about your physical here. If you're trading in paper, if you're in the futures, or if you're in the contracts, and this is not financial advice, I'm not a financial advisor. Make your own trades based on your own research. But me personally, I'd be looking to take profits above $31 before August 26th. Let's just put it that way, because I don't think the bullion banks are going to let all these calls expire in the money. I don't think they will. Not when they can smash the price down, and the CFTC will ignore it and allow them to do it. So I think most of these calls are going to end up expiring worthless. I'd love to be wrong, but history tells me otherwise.
Buyers of those calls are obviously betting that silver could rise 18% or more by August 26th. That, by the way, is when these options expire. And it's important to remember, 1,300 contracts may not sound like a lot in the context.
It's like 6.5 million ounces.
But the important thing is that the futures themselves represent 5,000 ounces. So that's a multiplier 50 times as large as what you're seeing on equities. So in fact, those 1,300 call contracts actually notionally represent more than the top 3 most active call contracts on SLV, which is and that traded about 70,000.
Just once, I thought we might be able to get through a day on CNBC covering silver without them mentioning SLV. Just once. Why do they always have to go to SLV? We're talking about the physical metal. We even had her flashing the physical bar. I mean, finally, they're talking about physical on CNBC. There's no need to go SLV. But there they go. It's CNBC.
Near dated call contracts today. So we are seeing some bullish activity, and we're certainly seeing more on the option side on the bullish side than the bearish one.
All right, some options sizzling for sure. For more on options action, by the way, be sure to tune into the full show on Fridays at 5.
All right, so all things considering, I mean, that was CNBC covering the silverbacks. It could have been a lot worse, right? It certainly wasn't good. I don't think they accurately portrayed us again. And that $1,000 price target, I really wish they would let go of that thing, but whatever. They want to use that. Let them run with it. It's their show. But all things considered, it could have been a lot worse. Anyways, that's all I got for you guys today. I really appreciate your time. Thank you for coming and checking this out. If you like this video, please give me a thumbs up and subscribe to my channel. It would really help me out. Until next time, live small, dream big.